Hey everyone, welcome back to the podcast. If you're new to Forex trading, or even if you've been trading for a while, today's episode might be one of the most important conversations you'll ever hear about money. Because today, we're not talking about how to get rich overnight. We're not talking about secret indicators. We're not talking about the one strategy that never loses. Instead, we're talking about something far more important: how to protect your hard-earned money in Forex trading. And honestly, if you can master this one skill, you'll already be ahead of most traders in the market. You see, most people enter Forex with dreams. They dream about financial freedom. They dream about quitting their jobs. They dream about making thousands of dollars from their laptops while sitting on a beach somewhere. And there's nothing wrong with having those dreams. The problem begins when dreams replace reality. Forex isn't a magic money machine. It isn't a lottery ticket, and it definitely isn't a shortcut to wealth. Forex trading is a business, and like every business, survival comes first. Here's a truth that many people don't want to hear. The goal isn't to make money first. The goal is to stay in the game long enough to eventually become profitable. Because if you lose all your capital, the opportunities no longer matter. Let's say you have a $10,000 trading account. If you risk $2,000 or $3,000 on a single trade because you're feeling confident, one bad trade can seriously damage your account. A few bad decisions, and suddenly your account is gone. That's why professional traders focus on risk before rewards. Most experienced traders risk only 1% to 2% of their account on a single trade. If you have a $10,000 account, that means risking only about $100 to $200 per trade. I know that sounds boring. It doesn't sound exciting. It doesn't sound like the flashy videos you see online. But boring is often profitable. And exciting is often expensive. Now, let's talk about stop losses. A stop loss is one of the simplest tools in trading, yet so many people refuse to use it. Why? Because they hope. They tell themselves, the market will come back. It just needs more time. I'll close it later. But hope is not a trading strategy. The market doesn't know who you are. It doesn't care how badly you want a trade to work. A stop loss protects you from turning a manageable loss into a financial disaster. Think of it like wearing a seatbelt. You don't expect to crash every time you drive, but you wear it anyway. Not because you're negative, because you're prepared. The same principle applies to trading. Now, let's talk about leverage. Leverage can be a wonderful tool. It allows you to control larger positions with less money. But leverage is like fire. Used correctly, it can help you. Used carelessly, it can destroy everything. Many beginners get attracted to extremely high leverage because they think bigger positions mean bigger profits. What they don't realize is that bigger positions also mean bigger losses. High leverage can wipe out an account faster than almost anything else. So if you're new to Forex, keep your leverage reasonable. Protect your capital first. There's another topic we absolutely need to discuss: influencers. Social media has created an entire industry around selling the dream of trading. You'll see people standing next to luxury cars, taking pictures in private jets, showing expensive watches, posting screenshots of massive profits. And then they tell you, join my signal group, buy my course, copy my trades. I'll help you turn a few $100s into financial freedom. Listen carefully. Not everyone in this space is dishonest. There are genuine educators out there. But many influencers make more money selling the dream than they do from actual trading. They know people are desperate. People want quick success. People want easy answers. And that's exactly what gets exploited. So don't fall into the trap. Don't blindly trust someone just because they have followers. Don't assume that a rented Lamborghini means trading success. Don't believe promises of guaranteed profits. Because in trading, there are no guarantees. No one can promise you consistent profits. No one can eliminate risk. Anyone who says
otherwise deserves your skepticism. Educate yourself. Ask questions. Verify information. Because ultimately, it's your money on the line. Nobody will care about protecting your capital more than you. Let's talk about emotions. Fear, greed, frustration, revenge. These emotions destroy more trading accounts than bad strategies ever will. Imagine losing a trade. You become angry. You immediately open another position. Then, another. You increase your position size because you're trying to win back what you lost. This is called revenge trading, and it's incredibly dangerous. Professional traders understand that losses are part of the business. Even the best traders lose trades. The difference is that successful traders don't allow one losing trade to turn into emotional chaos. They follow their plan. Learn independently.
Which brings us to the next point. Every trader needs a trading plan. Before entering any trade, ask yourself, why am I entering this position? Where is my stop loss? Where is my take profit? How much am I risking? Does this trade fit my strategy? If you don't have answers to those questions, you probably shouldn't be taking the trade. A trading plan removes emotional decision-making. It gives structure. It gives discipline. And discipline often separates successful traders from struggling traders. Now, let's talk about choosing a broker. This decision matters more than many people realize. Do your research. Choose regulated brokers. Read reviews. Understand fees. Avoid brokers making unrealistic promises. If something sounds too good to be true, it usually is. Take your time. A trustworthy broker is part of your risk management process. If you're brand new to trading, here's another piece of advice. Start with a demo account.
Practice before risking real money. Learn how platforms work. Test your strategies. Build confidence. Make mistakes while the money isn't real. Because mistakes in a demo account become lessons. Mistakes in a live account become expenses. Another habit that can transform your trading is keeping a trading journal. Write down every trade, why you entered, why you exited, how you felt, what worked, what didn't. Over time, patterns begin to emerge. You start identifying strengths. You recognize weaknesses. You become more self-aware. And self-awareness is one of the most underrated skills in trading. Here's something else I want you to remember. Success in Forex doesn't happen overnight. It takes time. It takes patience. It takes education. It takes discipline. Social media celebrates overnight success stories. But real success is usually built slowly, trade by trade, lesson by lesson, month by month, year by year.
They're the ones who remain disciplined. They manage risk. They protect their capital. They never stop learning. At the end of the day, the market will always be there tomorrow. There will always be another setup, another opportunity, another trade. You don't have to catch every move. You don't have to prove anything to
anyone. Your job isn't to impress people. Your job is to protect your capital and make smart decisions. Remember this. If you protect your capital, opportunities will continue to exist. But if your capital disappears, opportunities no longer matter. Respect your money. Respect the process. Ignore the noise. Avoid the traps. Stay patient. Stay disciplined. And most importantly, never risk money you cannot afford to lose. Thank you so much for spending this time with me today. If you found value in this episode, share it with someone who needs to hear it. Because the right information can save people from making very expensive mistakes. Until next time, trade smart, protect your hard-earned money, and take care of yourself. Thanks for listening.